When you begin investing, it's really quite overwhelming and you hear all these terms like duplication, rebalancing, portfolio allocation, and as a newbie, you don't really have the experience to put them terms into practice. And what quite a lot of people end up doing is just picking a load of random stuff and not really understanding how that all fits together. At least this was the case for me. It's kind of like when you go to a new country and you enter one of their supermarkets and you get super excited about all the new offerings that you see, but you don't really know what anything is. So what you end up doing is just picking a bunch of random things off the shelves, putting it in your basket, and then you realise you can't really make a decent and rewarding meal out of it. Instead, you just make a little bit of a mess. So in this video, I wanted to share a really easy way and a plan that you can simplify and clean up your investment portfolio. And this isn't useful for only beginner investors. This really benefits anyone that has any money in investments. And of course, as always, I am not qualified to give you guys financial advice. So this is definitely not that. What I've learned in my very modest 2 years of investing, and I still do see myself as a beginner investor, but that is that managing a complex portfolio is really, really difficult. And it takes a lot of time, a lot of mental capacity, and just a lot of energy. And quite often, it's easier and more beneficial to just keep things simple. But with FOMO and inexperience, this is quite difficult to do. What I think I really struggled with, and I do still struggle with this a little bit, is that really fine line between having a super diversified portfolio and a portfolio that is as cost effective as it can be with as few duplications as possible. And I like to be transparent and practice what I preach on this channel, so I am currently in the process of minimizing my own portfolio. I guess more importantly than minimizing is simplifying and just removing things that you don't need. But yeah, I'm currently in the process of that, and for me, it's removing duplications, which admittedly I do have quite a lot of right now. And in doing that and going through that process of doing this myself, I have a few things to say about how you can simplify your portfolio. The first thing is that you should do a Marie Kondo on your investment portfolio. This means removing any clutter that you have and removing anything that does not spark joy, as Marie puts it. When Marie talks about how to organize your wardrobe, she recommends that the first thing you do is get everything out of your wardrobe, put it out in front of you so you can visually see everything you have, and then begin working through it and getting rid of any clutter, so anything you no longer need or want. And this is kind of the same for decluttering and sorting out your investment portfolio. But of course, your investment portfolio is not hidden in your wardrobe. So what you could do is make yourself a spreadsheet. For me, it's been quite simple having a spreadsheet because I'm only looking to declutter my index funds and my ETFs. But if you have something a little bit more complex and you have a really complicated bunch of assets in your portfolio, then you could look to actually organize this by asset class, holdings, sector, and so on. If you have investments in lots of different accounts and they're scattered all over the place, you could look to use a website such as Morningstar just to find out about the funds that you actually own. I'm just thinking of a simple way that you could do it in one place rather than having to log on to all the different accounts that you have. You then need to work through what you actually have and look for any clutter, as Marie puts it. So in terms of investments, I think this means looking for duplications. And duplications could be in terms of geographical market allocation, it could be in the actual company holdings, it could be in the sector, it could just be in the asset class that you actually have. If you find out that you have 3 different ETFs which all basically invest into the same markets across the world, like 60% US, 10% UK, 5% Japan, and they're all pretty similar, then you probably don't actually need those 3. You can probably just cut this down to owning 1. And you may want to get rid of the 2 that are the most expensive, but that's just one suggestion. And what I try to remember is that you can actually achieve a really diversified portfolio just by owning 1, 2, or 3 different investment funds. And of course, this doesn't work for everyone. I know not everyone just wants one global tracker, myself included, but it's just something to think about. Have a look to see if you have any duplications that you don't actually need, as this was definitely the case for me. And thanks to all you guys out there that actually did comment this on my Vanguard portfolio videos. That was really, really helpful as a starting point for me. For some reason, Marie Kondo is now the theme of this video, so I'm just going to roll with it into point number 2. Marie Kondo says that you should get rid of anything that no longer sparks joy. Now, take this point for what it is, because when you're reorganizing your wardrobe, you may decide to throw out a white t-shirt because it doesn't really represent your bright and bubbly personality anymore. But what you don't really want to do, or at least I don't want to do, is remove my S&P 500 index fund because it's the boring option as compared to a small cap company that is really volatile and I know nothing about. So yeah, you do need to take this point for what it is. But this one comes down to thinking about why you're investing in the first place. This will then allow you to take a more logical approach and actually look at everything you own and figure out which is not really aligned with your financial goals anymore. And that's what I mean by sparking joy, which is no longer aligned with where you want to be. Because quite often this changes as you go on your investment journey and you learn more about investing. You'll be glad to know that my final point is nothing to do with Marie Kondo, but it is instead to look at past performance. If you're undecided about whether you need to get rid of anything in your investment portfolio or which funds you should be getting rid of and should be keeping, one way to do this actually, after you've moved through looking for duplications and which no longer align with your goals, is to actually have a look at how they've been performing over the time that you've owned them, and then expand that out and look at how the past performance has been historically. Because this will help you decide whether or not your money is best put elsewhere. I am by no means, as you'll hear from every person that is in the finance world on YouTube, I'm by no means telling you that past performance is an indicator of future performance. Because if it was, then we would all be millionaires right now, and I can tell you I am definitely not a millionaire. There's no point in holding on to an investment you made 5 years ago just for the sake of it, that you know is not going anywhere, it's a rubbish investment. You know, hats off to you if you're the first to admit this. Sell out of that position and maybe put the money elsewhere where it can do better. Of course, I am not saying that you should just go, willy-nilly onto your Vanguard account and just sell out of some positions and there you go, you'll have a simplified portfolio. There is of course more considerations that go into whether you should sell, hold, switch into a different investment type. All of these things definitely need to be considered. But I think you understand my point, hopefully. We are in quite rocky markets right now, and actually it's not just your portfolio that is looking red and not looking too good. Mine is also like that, so have a look at some of my worst performing stocks right here.